If you want to save your first $100,000, you don't need to live like you're broke and only eat rice and beans for the rest of your life, but there are 5 things that you need to do when you get paid in this order. That way you can save that $100,000 sooner rather than later. The first thing that I want you to do is to create 3 separate bank accounts. And the reason why I want you to do this is because each one of us have different things that we're good at. Like for example, me, I'm good at how I spend my money. I can control my spending very easily, but I'm not very good at controlling my eating. I like food. When there's food in front of me, I'm going to eat it. So in order to stop me from eating, I don't have the food in front of me, or I'll just eat whatever's there. So I've learned about me that some people are very good at eating, that when they start eating, they can stop themselves before they're full. When I start eating, if there's food there, I will eat it. But when it comes to spending, I'm a much better controlled spender than I am when it comes to eating. So if you want to control your spending, the first thing that I want you to do is create 3 separate bank accounts. One bank account is going to be for your spending money. One bank account is going to be for your investing money. And one bank account is going to be for your saving money. And the reason why you want to do this is so you don't accidentally spend your investment money, or so you don't accidentally spend the money that's supposed to be saved, because now it's out of sight, out of mind. And now what you want to do is anytime you get paid, your money is going to go here. But then as soon as your money goes into this bank account, you want to automatically take some of this money and move it into this bank account, and automatically take some of this money and move it into this bank account. Many banks will automate this process for you for free. If you don't have a bank that allows you to do that, maybe you look for new banks in your area that will allow you to do that. But a lot of banks will allow you to create an automation like this completely free. And now you have a system of knowing this is the money that you can spend. If there's no money in here, you have no money to spend. The second thing that I want you to do is know how much money you can spend versus invest and save. And a simple place to start is something like my 75-15-10 plan, which says that from now on, for every dollar that you earn, 75 cents is the maximum you can spend, 15 cents is the minimum that you invest, and 10 cents is the minimum that you save. Now, if you're watching this saying, but Jaspreet, I'm spending 100% of every dollar that I earn. How am I supposed to now take some money aside and use it to invest or save because I don't have some extra cash? Well, I want you to think of it this way. If the government tomorrow announced that there's going to be a new 25% tax on your income, what are you going to do? You're going to kick, scream, complain, cry, and then you're going to figure out how to pay it. Same thing here. Now what you're doing is not giving money to the government, you're giving money to yourself to make yourself rich. Because now what wealthy people do, and what you're going to be doing, is you're going to pay yourself first. And by paying yourself, I don't mean going out and buying a new Gucci bag. I mean now using money to make yourself wealthy. Your investments are here to make you wealthy. Your savings are here to protect you against a financial emergency. The spending money is there to allow you to have the nice things, go on the nice vacations, eat at the nice restaurants, buy the nice cars, but this money is not going to make you rich. This money will make you rich. This money will protect you financially. This money will allow you to live your life. But you need to make sure that now you're not spending all of your money here. That way you always, no matter what, pay yourself first. You're always going to be investing your money because this is where you're going to build your wealth. Now, if your goal is to put aside $100,000, let's talk about what this actually means. Because if you're making, let's just say $50,000 a year, and now you're going to be putting aside 25% of your income, some of it's for investments, some of it's for your savings to build your wealth. That means that right now you're going to be putting aside $12,500. At this rate, if you put aside 25% of your income, assuming you don't get a pay raise, because if you get a pay raise, you're going to be investing more money and saving more money, because now when you get a pay raise, your investments also get a pay raise. But if you don't get a pay raise and now you're putting aside 25% of your income, well, it's going to take you 8 years to have that $100,000 put aside. Now, some of this is going to be in your savings account, some of this is going to be in your investment account, but now you have a solid plan on how you can put aside $100,000 in not that long of a time, assuming you don't get a pay raise, but there's more. Number 3, if you want to accelerate how fast you can put aside this $100,000, you can also let your money make you money. Because now when you're putting your money here to invest, this money is supposed to grow. Now, this doesn't mean it's necessarily going to grow by a certain percentage every single year, but you're putting this money aside here. That way it gets bigger. That way your money is making you money here. The money here in your savings account probably isn't going to grow much. Sure, maybe if you put your money in a high interest savings account, you might get some return on your money, but this is where you really want to see your money grow. And if you know how to invest your money the right way, now not only are you putting money aside, but your money is going to be working to grow as well. That way now you're working to get a raise. That way you can give a raise to your investments and you can get a raise to your savings, but then your money that you put into this investment account is also going to be working to grow as well. That way this can grow even quicker so you can hit this goal even faster than 8 years. The two most common places where you can invest your money are into stocks and then into real estate. So let me talk about both and talk about the different ways that you can invest your money and different ways that you can actually get a return on your money. When you invest your money into the stock market, you're investing your money into a company. You're literally buying a piece of a business. Like if you go out and buy one share of the Amazon stock, you become one of the owners of the Amazon company. Now, the thing that I want you to understand here, that you don't have to go out and find the next Amazon or the next Google in order to make a lot of money. And this is the first mistake that so many people make when it comes to investing their money in the stock market, is they think they have to find the next hot stock. But the reality is, for probably 90 to 95% of people, you shouldn't be investing in individual companies. Why? Because most people don't have the interest or the education or the psychology to actually invest in individual companies. Because the reality is, when you invest in individual companies, if you really want to make money, you have to first understand, how do you actually analyze the company? What research do you do to keep up with the company? How do you keep up with the numbers? How do you keep up with what the management's doing? How do you listen to the earnings calls? What information should you be paying attention to? Most people don't care about that, and if you do care about it, well, a lot of people don't have the education or care about putting the education in to actually do that. And then if you are willing to do that, the next group of people don't have the right psychology to actually manage their investments, because the reality is market crashes happen. You're going to see booms and busts. And what ends up happening now to most people is they end up losing money in the stock market, when historically over the last 100 years, the stock market has gone up over the long term. Why? Because most people start selling and panicking when the market goes down, while smart and savvy investors are buying. And it's not easy to now actually do it. It's much easier to say it than actually do it, because now when you see your portfolio in the red, it can be very scary, and most people tend to panic, and then they make decisions based off of emotions, not financials. This is why most people shouldn't be going out and buying stocks, when the next best thing is buying something like a fund, potentially an index fund or an ETF. This is where now you're not investing in individual companies, you're investing into a group of stocks. That way now you don't have to worry about doing the research in individual companies. You don't have to worry about keeping up with all the companies. And now you just want to create a system where you're automatically buying some of these funds over the long term. Every week, every 2 weeks, every month, no matter what, you're just going to keep buying. If the market's booming, you keep buying. If the market's crashing, you keep buying. The only change that you'd make is maybe you buy even more when the market is crashing, because it gives you the opportunity to buy even more at a discounted price. Now I'm going to go over a few fund examples, but I want you to understand that, one, I'm not telling you what to buy, and two, investing has risks. You're never guaranteed to make money when you invest, which is why you need to always do your own research and never blindly trust a random guy on YouTube. So if you wanted to just invest your money in the stock market, you can invest in a fund like VTI. VTI is the total stock market ETF created by a company called Vanguard. What does that mean? If you go out and invest in the VTI ticker symbol, you're investing in literally the entire US stock market. So if you buy this one fund, you're buying a little piece of a lot of stocks on our stock market, which means essentially if the stock market goes up, your fund goes up. If the stock market goes down, your fund goes down. SPY is another fund which gives you exposure to the S&P 500. That means now you're getting exposure to the 500 largest companies on the stock market. SCHD is a fund that gives you exposure to dividends, dividend-paying companies. Now, I put a little asterisk here because, as a disclaimer, I do own SCHD. And so now the question is, how do you want to get paid, and what is it that you want to invest in? If you just want to throw your money into the stock market, well, VTI can give you that exposure. If you want to invest your money into the biggest companies in the stock market, SPY gives you that exposure. If you want cash flow, SCHD can give you that exposure. Now, this is where you have to start thinking, what type of investments do you want to make and how do you want to get paid? Because most people think of investing as, I'm going to put my money into this thing and then I'm not going to see this money until I'm 65 or 70 years old. I like to look at investing like, I want to invest my money into something and start generating some cash flow now. That's why the bulk of my investments, not all, but about 75% of my investments are cash flow producing assets. That means that I buy something and it pays me with cash flow. So the bulk of my stock market investments pay me with cash flow. The bulk of my real estate investments pay me with cash flow. I like cash flow just because it gives me cash in my hand today, and I can more reasonably predict how much cash flow I'm going to get as opposed to how much a stock or how much a real estate property or how much a business is going to be worth at some point in the future. If property prices and stock prices go up, that's icing on the cake. But I just want that cash flow because the cash flow gives me cash that I can use today. And now if you're working to build up $100,000, the cash flow is putting more cash in your account, or that cash is being used to buy you more shares. Because for me right now, with my stock market investments, the things that are paying me cash flow, I'm not using that money. I'm taking that cash and I'm reinvesting all of it. So I get the cash flow from my investments every 3 months because I get my dividends every quarter, meaning every 3 months. And then this money goes right back into the market to buy me more cash flow producing assets. So every week, the way it works for me is every week I have cash going into my funds. Then most of these funds are paying me with cash flow, which goes back into these funds to buy me more cash flow producing funds. So it's like a machine that's working to produce more cash flow while I'm throwing more money in there to buy more of the cash flow, which brings me to number 2, which is real estate. Real estate is one of my favorite places to invest because when you invest in real estate, now you're buying something tangible. You buy something that you can see, feel, and touch. You buy the bricks, you buy the land, you buy the windows, you buy the doors, and then you can also create cash flow. So now the way it works is you're going to go out and you're going to buy this property and then you're going to rent it out to somebody else, and then somebody, that's supposed to be an arrow, somebody is going to come in and live in this property and they're going to pay you rent. Now if you do this the right way, this rent should cover all of your expenses. That includes your property taxes, your insurance, your maintenance, your management fees, and cover your vacancy costs and cover any debt that you might have, and then put some money in your pocket. Now, does this mean that every real estate deal is going to be profitable? No. This is where the research comes in because, well, right now you have a very hot real estate market, which means it's harder to find a good cash flow producing deal. Does that mean that there's no deals out there? No, it means you got to be pickier and you got to work to find the good deals. And this is where, again, that financial education comes into play. Now, should everybody be a real estate investor? Of course not. But it creates opportunity for the right people. Now, if you don't want to go and actually invest in real estate, there are funds that you can put your money in that will give you exposure to real estate properties. I have an example of one of my affiliate companies that allows you to do this down in the description. But this is where just understanding that you can get cash flow from different places, and then if real estate prices go up, well, that's icing on the cake. If real estate prices go down, well, at least you're still getting that cash flow. This is now where you have to make that decision of how do you want to invest your money. Do you want to invest your money and see the future growth, or do you want to invest your money and see the cash flow? For me, I like cash flow. That's why the majority of my investments are cash flow producing, and some are not. But you got to figure out what are the right investments for you. That way now you're working to put that money aside, but then your money is also working to make you more money. Now, if you want to go step by step on how do you actually make your first investment, how do you step by step start generating cash flow, even if you don't have a ton of money, we have a free ebook that we put together in Market Insiders that goes over how you can make your first investment, what investing is, how you can get started with investing, and how you can start generating cash flow. It's completely free, so if you want to read this ebook, I'll link it for you down in the description below. Number 4, I want you to manage your 2 S's, which is your spending and your saving. And I'll start by talking about saving because the reality is your savings are not going to make you wealthy, and your savings are probably going to lose value to inflation. If the interest rate that your bank is paying you is lower than what inflation is, your savings are effectively making you poorer. Now, that being said, that doesn't mean you shouldn't have any savings. That means you need to save your money strategically. That means you want to have somewhere between 3 months and 12 months worth of expenses saved up. Now, I know this is a big range, and the reason why it's a big range is because, well, it depends on where you are in life. If you're young, you don't have any financial responsibilities, you have more freedom to be more risky, and maybe you can take on more risk, which means you might only need a few months worth of expenses saved up. If you have kids, you have a spouse, and you're not really open to this whole idea of taking risk, and you don't like this idea of investing your money, and you feel safer with the cash cushion, then maybe you have somewhere between 6 and 12 months worth of expenses saved up. You got to find what's the right number for you, but somewhere between the 3 to 12 months of savings saved up here. Once you build that savings cushion, Now, you're no longer going to save money and you're going to reallocate that money here towards your investments because your investments are what's going to make you wealthy. But in order to do this, what I want you to do is look at your credit card statements, look at your bank statements, see how much money you're spending every month. Add up your rent, your mortgage, your utilities, your car payments, your car costs, your gas, your food, your eating out, your travel, whatever your costs are. Multiply the number by 3, multiply the number by 12, and that gives you a range of how much money you need to save. Once you hit that number, well, now you can stop saving that money. You can leave the bank account there because this is your cushion. Then you can start investing that money. The second S that I want to talk about, though, is how you spend your money. Because a lot of people assume that if you can buy something, that means you can afford it. But the reality is being able to afford something is very different than being able to buy something. Because if you have $100 in your account, you can go out and buy a $500 phone. But the reality is you can't actually afford that $500 phone or the $500 Gucci belt or $500 whatever, because financing doesn't mean that you can afford it. See, when most people think of affording something, they think I can just afford the payments. But now if you really want to become wealthy sooner, and if you really want to achieve that financial success that you want sooner, and you want to have to stop kind of spinning your wheels in this financial system sooner, you got to stop playing in the same game as everybody else. And that means you're going to have to control the way that you spend your money. And that means from now on, if it doesn't put any money in your pocket, don't use debt to buy it. The only exception to this would be the house that you live in. But if it's not putting any money in your pocket, don't go into debt to buy it. So what does that mean? You want to go out and buy a new car? Great. Don't get a car payment. If you want to lease a car, okay, well, you got to be really rich to be able to do that. Leasing a car is like going and flying first class. Flying first class and sitting economy is going to get you to the same place, but flying first class is a whole lot more comfortable. Leasing a car is very comfortable. It comes with a lot of perks, but you got to have the money to be able to actually afford that. That means if you can't afford to buy that car comfortably with cash many times over, don't even think about leasing it. So if you want to get a car, buy a car that you can afford with cash. That way now you don't have to worry about the monthly payments, because now when you don't have to worry about the monthly payments, all of a sudden you're going to have a whole lot more extra money every single month, because now not only are you not putting the money into the monthly payments, you don't got to pay for the premium gas, you don't got to pay for the expensive insurance, you don't have to pay for the expensive maintenance, and now you have a whole lot of extra money every single month. Yeah, maybe you don't have the BMW anymore, but you still got the extra money, which can be used to make you wealthier. And now when you become wealthy, hey, go out and buy the BMW or the Benz, and you don't have to worry about the price. So now we talked about how to spend your money the right way. We talked about how to invest your money, that way you can grow your money. We talked about how to save your money, and this brings me to number 5. If you really want to amplify how fast you can put aside the $100,000 or take it to $1 million or whatever it is that you want to hit, you got to earn more money. Because now if you want more money going into each one of these buckets, you need more money flowing in. As soon as you start doing this, you're going to love the idea of investing. You're going to see the potential growth. You're going to start running the numbers. You're going to say, you know what, this is cool. And yeah, you might start spending less. That way you have less money going out. That way you have more money to invest here. But there's a limit to how little you can spend. But there's no limit to how much you can earn. And this is where things really get fun, because when you understand this, now you're going to be looking for new and creative ways to earn more money. That way you can increase how much money you're putting here, because if you can grow from $50,000 a year to $500,000 a year, now you really can amplify how much money you're spending, investing, and saving. And the first time I say that, you might hear, Jaspreet, where in the world am I going to go from $50,000 to $500,000? Like, that's not even in the realm of possibilities. Well, this is where you have to start thinking a little bit different than what you might have been doing. Because now if you really want to start earning more money, you might have to create your own income. You might have to work to create a side hustle. Start watching YouTube videos on how to earn more money. Start reading books on how to earn more money. If you start opening your mind to the possibility that you can earn more money, now you might start taking actions on how you can earn more money. Because if we just keep doing the same thing every single day, you're just trying to earn more money from your job, maybe you'll get some pay raises here and there, but it's not going to be what you need if you really want to take it from $50,000 to $500,000. And if you want to 10x where your income is, you're going to have to start changing the way you think, and you're going to have to start changing what you do. But in order for you to do that, you have to believe it's possible first. And if you believe it's possible, well, then you're going to start putting in the action to actually make it possible. What are different things that you can do? Well, the internet has made starting a business or creating an income so much more accessible. This could be creating a product. This could be creating your own business. This could be working to provide value to other people on the internet. It could be a side hustle. You can be a freelancer. There are an unlimited number of things that you can do. Now, if you tell me, Jaspreet, I hate the idea of being an entrepreneur. I hate the risk of trying to start my own thing. I hate that idea of trying to manage that type of stuff. Well, that's okay. You don't have to go out and start a business. You don't have to go out and start a side hustle. If you really don't want to do that, then now you want to find a more creative way of how you can earn more money. If you can't do it from your job, if you can't do it from your career, can you add on a second job? If that's not practical either, then how can you increase your income? Can you get a certificate online? Can you get some sort of certification online? Can you do some sort of education that will allow you to earn more money? There's a lot of online certifications that will take some time, that might cost you some money, that will allow you to earn more money. If you can start doing these things and maybe get a new career or find a new job that will allow you to earn more money, now the key is when you get a raise in your income, you don't want to just raise your spending without raising these. That's why we're following a plan that will scale with your income, because the biggest mistake that so many people make is that as soon as they start to inflate their income, they start to inflate their lifestyle without inflating their investments and inflating their savings. So as you start to earn more money and as you work to earn more money, you got to make sure that you're also increasing this and you're increasing this along with this. That's why you want to have a scaling route where now as you earn more money, you're also spending more, investing more, and saving more. That we're always paying yourself before you go out and make everybody else rich. Next time you get $1,000, don't go out and buy a new watch. Instead, there are 5 things that I want you to do with that money that we can turn that $1,000 into $10,000 or $50,000 or even $100,000 or more. Gotta get my watch back on. You've probably heard people say that you need to invest your money to become wealthy or invest this money into yourself